Hello everyone. This is the pre-market report video for 6th February 2023 in terms of Nifty and Bank Nifty. In this video, along with the usual stuff, I like to talk about Aswath Damodaran's view on Adani stocks. Aswath Damodaran is the Dean of Valuation in New York Stern Business School and he is one of the very influential people in the world in terms of valuing a stock or a company. Anyway, first let's see what happened on Friday. Nifty opened a gap up of over 100 points, then it erased all its gain. Again, the positive European market opening, slight recovery of Adani stocks and low oil price kind of increased the Indian market sentiment and closed the Nifty with near 240 points up compared to Thursday closing. It's not all positive on Friday. The advanced return ratio in the Indian market was 2:3, which means for every 2 stocks advanced on Friday, 3 stocks were declined. This kind of shows that the overall sentiment was not that great, but the short covering on some major companies in the Nifty index made it to close really positive. Sector-wise, banks increased by over 2%, mainly driven by PSU banks, which increased by over 3%. Then another sector that was really positive on Friday was auto, up by 1.25%. On the negative side, power sector dropped around 2%. Healthcare, oil and gas dropped near 1%. Again, FII net sold shares worth approximately 930 crore rupees and DI net bought shares worth approximately 1265 crore rupees. Coming to US, before their share market opening, Bureau of Labor Statistics released the non-farm jobs payroll data for December month. Basically, it means it's a measure of number of new additional people employed in the country in that particular month, excluding the farm industry. So, for last month, for December month, the data comes as 5,17,000 new jobs were added against the analyst estimation of 1,85,000. That's the comparison number. 5,17,000 new jobs versus against expectation of 1,85,000. Additionally, unemployment rate comes as just 3.4%, which was also a lowest level since 1969. So, as a summary, this jobs data on Friday was the very good number and obviously more new job accounts for the major economic activity and consumer spending. This kind of forced the investors and made the Fed CME watch tool to over 80% probability that the Fed people are going to increase the interest rate by another 25 basis points in the March month FOMC meeting. This raised the peak US interest rate cycle to 4.875% with more upside risk if labor market data continue to move from strength to strength. Earlier, analysts were bullish on the basis of estimating that Fed will pause the interest rate hike in the March month meeting and now that's fading away. And because of this, S&P 500 opened a gap down of over 1%. Even on Friday's pre-market video, we discussed about the Amazon's earning and future guidance. That poor future guidance made Amazon to drop over 8% and affected all the consumer stocks in US. In the end, Dow Jones dropped by 0.38%, S&P 500 was down by 1.04% and Nasdaq was down by 1.59%. However, despite the negative market, US VIX crashed by over 2% to 18.33. And this strong jobs data also increased the dollar index and 10-year treasury bond yield to over 1%, whereas in case of crude oil, it pushed down over 3%. On Saturday morning, dollar index closed at 102.8 and 10-year treasury bond yield closed at near 3.52%. Regarding oil, WTI crude oil closed at near $73 per barrel and Brent crude oil closed at just below $80 per barrel. Additionally, on Saturday, US Treasury Secretary Janet Yellen said that G7 countries, European Union and Australia were forcing the price cap on crude oil products from February 5th onwards, which means yesterday. This news was not factored on Saturday early morning oil price close. So, at present, it's expecting that WTI crude oil to go as low as $70 per barrel today. Let's see. About Indian areas, because of the bad US market, both IT stocks closed significantly negative. Whereas in terms of banks, HDFC Bank closed positive of 0.5% and ICICI Bank closed negative of 0.5%. Regarding SGX Nifty, on Saturday morning it closed at 17,800. So it's kind of indicating 60 points gap down opening. So that's what happened on the global market on Friday and during the weekend. Now let's move on to the Indian market related info. During the weekend, various major companies in India released the earnings such as SBI, ITC, Marico, Indigo Airlines and Paytm. But in this video, I like to discuss about just ITC and SBI alone. First, ITC. I hope most of you know ITC is one of the very few stocks that performing very good in the Indian market at present. I mean, year to date, it increased to near 15%. In comparison, Nifty dropped 2%. If we take a last 1 year period time, despite weak global and Indian market, ITC stock price increased over 60%. Anyway, regarding Q3 results on year-on-year basis, ITC whole group revenue increased by only around 3%. The revenue was mainly dented by agri-business, which dropped over 38% because of the Indian government's export control on wheat. However, the profit increased over 20% compared to a year ago. The highlight here is their operating profit margin. I mean, compared to a year ago, which was near 25% in previous quarter, it now increased to 32%. So generally, I consider this as positive, but it will be really tricky to predict if we consider other factors such as recent stock price run-up and like how much the market will give importance to agri-business in ITC whole group kind of. Anyway, let's see. Then the next one I like to discuss is about SBI. On year-on-year basis, the revenue increased over 24% and the highlight here is their profit. I mean, their profit increased by 68%, which is kind of crazy since SBI itself a very big company and its profit increased to all-time quarterly high value. For those who don't know, at present SBI got the total deposited amount of near 42 lakh crore rupees and their total loan book value is near 31 lakh crore rupees. Here is the problem, it's not all positive in SBI. Their deposit increased by only 10%. In comparison, HDFC increased by over 19%. Whereas SBI loan growth increased by near 17%. So, they are grown in the previous quarter, that's fine. But I guess this low deposit growth will affect the future growth potential. Anyway, for today, this result is very positive for SBI. Then the next item I like to discuss is about Vodafone Idea. I hope most of you know at present Vodafone Idea has got over 2 lakh crore rupees government due that they have to pay in 10 installments till 2030. And for that, for this year due, Indian government asked Vodafone Idea to pay their due of near 16,000 crore rupees in equity share. So as a summary, at present global market is negative and the expectation of another possible US interest rate hike in March, SGX Nifty is indicating gap down opening. However, there are some positive banking news as well. Regarding Reliance, on Friday, it got over 70% delivery percentage and along with Ashok Leyland, it got the long open interest build-up. But again, there are some negativity about RBI raising 25 basis point interest rate hike in the upcoming Wednesday monetary policy meeting. Then about the items to look out, today there is a schedule for release of results for Tata Steel, Adani Transmission and LIC Housing Finance. Regarding macro, today in the afternoon, there is a schedule for UK's construction PMI and then in the aftermarket has Europe's retail sales data. Finally, about Aswath Damodaran's view on Adani. As I said earlier, Aswath Damodaran is the Dean of Valuation in one of the top business school. To be honest, all my valuation knowledge about the stock market, I learned from his free course. Here in the description below, I'll attach the link of his view about Adani stock. It's a 30-minute long video and I strongly recommend all to watch it. Because in that one video, we can learn more about the stocks than that of most of the paid courses. Anyway, in short, what he said is that what Hindenburg said about Adani is very harsh. He acknowledged that if Adani owned more shell companies in Mauritius, then that companies owned Adani stock means then there will be a problem. But he's not seeing that in the stock trading volume. Because of that, he valued Adani Enterprise as a worth of around 900 rupees per share. And also he said that he won't be buying Adani stocks since because of its political connection. In terms of technical, both Nifty and Bank Nifty forms a long green candle with a long lower shadow. On Friday, it did break out the 17,800 with a huge volume. But the problem here is that in the last 5-6 session, the base level was shifted to 17,500. So it's really important today to close over 17,850 to shift the base level back to 17,800 level. If the base level shifted back to 17,800 means it's a signal that indicating that the current downtrend has come to an end. Then there will be more possible upward trend to 18,250. Coming to moving averages for Nifty in daily chart, it improved from strong sell in last Thursday closing to buy signal now. At present it's trading above 5, 10 and 200-day moving averages. In case of 100-day, it trades above exponential moving averages and below simple moving averages. So as a summary, 7 favors it and 5 against it. Thus, it's a buy signal. Coming to technical indicator summary, that too it improved to neutral from strong signal. However, regarding Bank Nifty, the technical indicator summary is still indicating the sell signal, whereas moving average summary, it improved to buy signal. Regarding options open interest, for Nifty, if you see the change in open interest, there were very large quantities of put options were added between 17,400 and 17,800. Whereas significant new call option open interest were added at above 18,000. 17,700 is the point where the maximum nearby new put options were added, and thus 17,700 is the immediate support today. Then based on overall options open interest, 18,000 got the maximum nearby call option open interest without significant put option open interest. So 18,000 is the resistance to break. Coming to Bank Nifty, based on change in open interest, relatively high new put options were added at 41,500 to 40,500 and new maximum nearby put options were added at 41,000. So 41,000 is the support to look out for today. Then based on overall options open interest, still 42,000 got the maximum call options without the significant put options. Thus 42,000 is the resistance to break. Before closing, there were some geopolitical crises yesterday that US destroyed the Chinese balloon that flew over US on suspicion of spying. Honestly, I don't know how it will play in the market sentiment, but I like to highlight this. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and it will also motivate me to do more. Please don't make any investment decision based on this as I am not a SEBI registered advisor. I am doing it for my and viewers' educational purpose only. Thanks for watching.